Hello, everybody. I'm Natalie Brunell. Thank you so much for checking out my show, where I get to hear from the leading voices in Bitcoin, financial markets, political structures, philosophy, and more. Please make sure you're subscribed to the show. And if you're watching this on YouTube, like this video so more people see it and hit that notifications button so you don't miss out on any new content. This podcast does not provide financial advice. It is for educational and entertainment purposes only. So make sure you always do your own research before making any financial decisions and be aware of your risk tolerance. I'm able to produce this show thanks to my sponsors, and I'm very picky about who I choose to partner with. So I hope you'll take the time to listen to the ad reads throughout the show. All right, now to my main partner, Swan Bitcoin. Swan is where I do all of my Bitcoin purchases. In fact, I dollar cost average every single day, not every week, not bi-monthly, every single day. I love Swan Bitcoin because it is a true Bitcoin only company. Swan has a ton of free educational resources on their website, and they now have a mobile app, which I've been using to smash buy some Bitcoin. And Swan Studios produces my new show, Hard Money, which covers the biggest news in Bitcoin and the global economy. It's like an orange-pilled version of CNBC, so make sure to check that out on YouTube for all the biggest headlines, because we are not afraid to question the mainstream narrative. All right, it's time for the show. All right, welcome back to this special episode of Coin Stories, kind of recording this impromptu because there's a lot going on with DCG and Genesis. I'm sure many of you saw the letter that Cameron Winklevoss sent to Barry Silbert. So I wanted to catch up with Sam Callahan because we did that awesome GBTC episode that so many people have given me really, really great feedback on. They learned everything about the arbitrage trade and what was happening with the crypto contagion. So Sam, thanks for coming back on.
Yeah, happy to be here. Yeah, good to see you always, Natalie.
Yeah, so share a little bit about what's been happening since we last talked, because it seems like there's a big question. Is Genesis, is DCG going to come down? And maybe you can share a little bit about your perspective on the Cameron open letter to Barry.
Yeah, well, if you go back and listen to that episode, I kind of broke down some of the options. And one of the options that I think is most advantageous to everybody involved in the situation, whether that's Gemini or Genesis or DCG, is for them to work out a deal, for them to restructure these loans, to negotiate with each other, and try to avoid a full-on Chapter 11 bankruptcy of Genesis, because none of these people would benefit from a long, lengthy, expensive bankruptcy proceedings. And it definitely wouldn't help some of these creditors like the Gemini Earn clients. They wouldn't have access to their funds for probably a long time if it goes to that scenario. And so since early December, the idea was they created these like creditor committees who are talking with Genesis, who are talking with DCG. All the lawyers are getting together, and they've been trying to work this deal out. But, obviously it's January now, and we really haven't heard much of an update. And so the takeaway there is that maybe negotiations aren't going that well. And then Cameron Winklevoss, who's one of the co-founders of Gemini, he wrote this public letter to Barry Silbert, who's the founder of Digital Currency Group, who's the parent company of Genesis, just kind of get everybody up to speed here. But he wrote a letter to Barry Silbert, and he was very critical in that letter, right? He said, you're basically doing bad faith stall tactics. You're not kind of acting in good faith here. You're not speaking with us. You're not negotiating with us, which, isn't exactly what you would want to see if you're a Gemini Earn user, or if you have any kind of funds tied up to these assets, because you want them to kind of work out a deal. But Cameron's making it sound like they're not really getting that much headway at all here. So that's kind of my first takeaway from it.
Well, and he definitely in that letter pulls on the heartstrings of, illustrating that these are school teachers and police officers. These are average people who gave money hoping to build on their savings, and now they have no access to their funds. But at the same time, Barry then came back and started saying that the information wasn't true. And it could be very confusing for the average person, because it's like a he said, she said, he said, and no one knows what the truth is, because at the end of the day, we talk about how the Bitcoin blockchain is supposed to make everything more transparent, but clearly everything is not in this space. No one really knows where the funds are.
Yeah. And so Barry responded to that letter And he said, DCG didn't borrow $1.67 billion from Genesis, but in a letter to shareholders in November, he did say they, took out a $575 million loan that's due in May 2023 from Genesis. He also has a $1.1 billion promissory note that's due in 10 years and from Genesis. And so it's almost like, I think, some kind of technicality. There's also not that many known details about the makeup of that 1.1 billion promissory note. He's making it sound like they didn't just technically borrow the money, but we don't know the details of it. We don't know what was used as collateral. We don't know if it's callable or not. And so for a loan to be callable, it means that Genesis, they're the issuer of that loan. They can call it back at any time they want at a predetermined price, or if certain events happen. So in the case of like a bankruptcy, they could call back that loan. And so we just don't know some of these details around it, but Barry's making it sound like, hey, actually, we're in good standing here. We haven't missed an interest payment to Genesis. You're basically fudding us right now. Which, I mean, you just don't want to see this. Like, they're supposed to be in a room together. Their lawyers are supposed to be talking, working these out, but instead they're basically fighting on Twitter. So it's not exactly encouraging.
Well, a lot of people are worried that GBTC is going to be liquidated, which would send a lot of Bitcoin into an illiquid market. Can you remind people again, we sort of touched on this in the first interview, but what is Grayscale Trust actually allowed to do? And what do you think could happen?
Well, so DCG they're the largest shareholder of GBTC. So they own over 66 million shares of GBTC. And that's about 10% of the total supply. But they can't touch like what's actually in the trust, like the Bitcoin. That's why it's in a trust structure. It's, there's safeguards in place. Now, if they decide to liquidate the trust, that would be a whole different scenario. And that would be in the event of like a DCG bankruptcy where they would decide to liquidate the trust.
But they can, technically they can liquidate it in the worst case scenario.
Yeah, that would be a nuclear option. You got to understand, they would only be doing that. It would basically be killing their business because Grayscale is their number one asset. It's a cash cow. Yeah. To liquidate the trust would be for them to voluntarily do that. This is why I say it would probably only happen under bankruptcy, their bankruptcy, DCG's bankruptcy, which is different than Genesis's bankruptcy.
Right.
But in that event, there is language in the charter that they have the sole discretion to liquidate the trust. But even then, it's in their discretion, like whether or not it gets paid out in dollars or in kind in Bitcoin is another question altogether. From the language in the charter, it seems like that would be up to them to do that. Now, here's where it gets where shareholders actually have some kind of power here is in the event of a DCG bankruptcy, shareholders from the language in the charter, if they greater than 50% of the shareholders vote, they could say, no, we don't want to liquidate the trust. We want to move the trust to a different sponsor instead. Right. And so that's what the power they have in the event of a bankruptcy. So it's very unlikely that DCG will decide to liquidate the trust because it would kill their baby, kill their Grayscale Bitcoin trust, and it would end their business essentially. But in the event of a bankruptcy, shareholders, if they vote greater than 50%, could prevent the liquidation of the trust and have it moved to a different sponsor. It's probably why you saw there was a Valkyrie, which is another type of fund that puts out all these ETFs and stuff. They like raised their hand and they were like, hey, I have a proposal. Like, we can take the trust. And I thought that was really funny because it's like, obviously you want the trust. It's like a freaking cash cow. But they're kind of just raised their hand saying like, we could do it. Like just putting it out there. Like we'll take over sponsor of the trust. And I think they're just letting it known that in the worst case event where you have a DCG bankruptcy, there are people out there or institutions out there that would be interested in becoming the sponsor of this trust. And it really is no surprise why it's a cash cow. So yeah, so there are options. But yeah, I think the liquidation of the trust, I just don't see that really as a likely scenario. There's a probability, of course, but I see it as a kind of not the most likely.
We're going to take a quick break from the show to hear these messages from my sponsors. First up, iTrustCapital. Do you save in Bitcoin for your retirement in your IRA? iTrustCapital allows you to invest in Bitcoin and other digital assets with the tax benefits of an IRA. And unlike the stock market, you can buy and sell 24 hours a day. Instead of paying taxes on Bitcoin gains every year, you can defer taxes using an iTrust crypto IRA, or with an iTrustCapital Roth IRA, you can withdraw tax-free at retirement. iTrust recently hit a milestone of $6 billion in total transactions across the platform, and that's $6 billion in tax-advantaged accounts that those 87,000 new IRS agents can't do anything about. The iTrustCapital platform is easy to use and only takes a few minutes to set up. And if you want to start investing with a $100 bonus, head to iTrust.capital/Natalie Brunell. Next up, let's talk about Bitcoin 2023. That is the biggest Bitcoin conference in the world. And take a look at the video from last year in Miami. It was an incredible event that was jam-packed with the best speaking sessions, workshops, and networking events that I've been to in the space. I had the chance to live anchor the Bitcoin Magazine news desk and serve as MC. And it was such a full circle moment for me to be at that conference because the first one I attended was Bitcoin 2021 in Miami. And that's where I actually launched the CoinStories podcast. I went on a media pass because I used to be a reporter, and I actually went backstage and started asking the speakers like Michael Saylor and Preston Pysh if they would come on my show. And they did. And a year later, I'm back at the conference as someone who actually has a career now in Bitcoin. So you never know what can happen at these events. I highly recommend going so you can meet other people that share the same values and passion for Bitcoin. And if you want your ticket at a 10% discount, head to b.tc/conference and use the code HODL, HODL. I'll see you there. Fold. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to your groceries, with Fold's Bitcoin Cashback debit card, and win free Satoshis every day, or even a whole Bitcoin by spinning the daily wheel and the purchase rewards wheels. I actually have an alarm set every single day so that I never miss out on spinning the daily wheel and earning free sats. And, I have to say that Fold is one of the best ways to get someone completely new into Bitcoin because they can start earning it and learning about it and using it. So if you want to sign up and join the fun, head to foldapp.com/Natalie for 5,000 in free sats. All right, now I want to tell you about a company called Crowdhealth, which is a Bitcoin-enabled alternative to health insurance. Because let's be honest, the government and insurance companies have jacked up prices. They've made things super complex. And when you send your money in, it essentially goes into the health insurance black hole, and then you never see it again, even if you don't get sick and you don't need medical services because, you don't eat fiat foods. The great news is there's now an alternative brought to you by Bitcoiners, and it is called Crowdhealth. It is very different from insurance. Instead of sending your hard-earned money to an insurance company, you hold your money in an account that Crowdhealth helps you set up. And you can even convert the dollars in your account to Bitcoin. Now, the company is all about community. Remember, it's called Crowdhealth. So when someone in the community is in need, needs care, needs help, you can choose to actually use the money in your account to help them, or you can keep it in your account. And if you ever leave Crowdhealth, you can take the money that's left with you. If you want to learn more and sign up, you can head to joincrowdhealth.com/Natalie. Now back to the show. I wanted to get your insight because I was listening to some Grant Williams podcast. We were chatting about it off air, and Grant mentioned this sort of idea of there's this stool and there's like 3 legs left, and one of them's Binance and one of them's DCG, and I forgot what the other one is, but it's just sort of the question of, when's the next one going to be kicked out? Because in the event of another, let's say Genesis is bankrupt, they have counterparties that would obviously need to liquidate assets. And so there's potentially a lot more downward pressure on Bitcoin just within this ecosystem. And we'll talk about macro in a second just to finish up the conversation. But, can you offer your perspective on sort of where we're at with also questions surrounding, Binance? A lot of people are wondering if that's going to be the next domino, and just how interconnected everything is, and the fact that things haven't fully been flushed out, even though we've gotten a lot of the excess out and the contagion has wiped out, at this point, billions and billions of dollars, but it still could be more painful, right?
Yeah. I mean, I'm focused on the DCG, Grayscale, Genesis scenario or situation, because I do see that as the most immediate risk. for some downward price pressure, some fallout from that, because it's ongoing, right? Like we know there's something going on there. There's a ton of speculation around Binance, and there really has been for a long time. They've always been this kind of offshore, unregulated exchange that has some kind of shady practices in the past, wash trading, all kinds of things like that. For me, with Binance, the biggest risk is regulatory risk. I mean, they're currently under investigation from the DOJ for manipulation as well as other things. And so, if you have funds on there, like even if they are completely solvent and they're running a perfect exchange 1-to-1, if they, get charged with something from the DOJ, your funds could be inaccessible in that scenario. And so just like anything, like I don't think you should hold funds on these exchanges. You should withdraw your funds into self-custody, remove that counterparty risk. And then there's a lot of other speculation around it. Like there was obviously a ton of withdrawals that happened, but they did service all those. And there was some concerning on-chain transactions, but there's still a ton of unknowns about what those were. And so again, we don't know a lot of these like specifics, but the regulatory risk is real there. And if you're somebody who has funds on Binance, I don't know what to tell you. Like you shouldn't be taking that risk and that counterparty risk and that regulatory risk with your funds. And it's trivial to take self-custody. It really is. It's intimidating at first, but you can do it. And you can reach out to people at Swan and we'll help you if you're confused about it.
Right. And there were also those concerns about the two market makers and how much CZ actually controls them, which makes you wonder, are they trading against their users? And then again, who knows what's happening, but they also create their own native token, right? BNB props up a lot of this, exactly. A lot of the company. And if you want to list a token on their exchange, my understanding is you basically have to have a bunch of BNB. And it goes back to that whole discussion of, what makes Bitcoin a commodity versus a security, like all these other tokens. And I can't tell you how many times I've now gotten the question, especially from my friends who aren't, they don't have finance backgrounds, investing backgrounds. They're like, what's a commodity? And I think the other day I was trying to come up with an analogy and I was like, well, imagine milk, right? Like if you want milk, you have to go to the store and buy milk, or you have to get a cow to produce you some milk. The tokens are like creating milk coin, and then these guys milk you for all your worth, right? It's like totally different. You can create as much milk coin as you want, but it's not actually milk. And
the similarities between Binance and FTX are there, right? You just laid them out. They have their own exchange token, the amount of leverage they offer, their unregulated.
100x. How do they pay for you trading 100x leverage on that exchange?
Yeah, exactly. So I don't think they're the exact same situation at all. Mm-hmm. But there's enough red flags there where like there's other options now in the market. Like if you desperately want for some reason to hold your Bitcoin on an exchange, I mean, you can use other custody solutions out there that are in the US regulated, that aren't these shadier exchanges. So if you don't want to take self-custody for whatever reason, I don't really understand that, then use these other ones that are safer because, there's a ton of red flags with Binance, and I'm sure we're going to see them come to light soon enough.
Yeah, there are more questions than answers right now for sure. Oh, and I just remember that last leg of the stool was Tether.
Tether is one of those things like, I mean, it's been on for years and years and years. One of the hardest trades was being short Tether the last couple of years because it's an expensive trade to put on, and you've just watched every other thing blow up besides Tether. So
I have so many questions about that too. It underpins so much of this ecosystem, but maybe we'll save that for another.
Yeah, I did want to say something actually about what you were saying about securities and commodities, because part of the reason why you're hearing Cameron Winklevoss from Gemini start to publicly, come out hard against Barry and saying, hey, we need to get this done, is because there's been class action lawsuits starting to come out against Gemini from Gemini Earn users. And, if you just look at Gemini Earn as, they're basically the exact same product of the BlockFi interest accounts where they had to settle $100 million with the SEC for unregistered securities. And if you're looking at this product, it's really hard to see how it's not um, basically acting like a savings account. It's basically a non-bank acting like a bank. And that's not a good place to be. And so there's been a securities class action lawsuit filed against Gemini. Every single day that goes by that Gemini Earn users aren't getting their funds and don't have access to their funds. I mean, you can just imagine what their client service team has to deal with right now, every single day getting message from their clients. Now they got lawsuits and they don't want the light on them because, I mean, you're looking at this thing. They offered interest accounts on 38 cryptocurrencies. And we're talking about like small cap, like shit coins, like just stupid little coins.
Yeah.
And they were offering interest on them and they were collecting a fee. And they had one approved borrower where they kind of had this business going, and it was Genesis. And did they disclose it enough? Did they write in their terms and conditions what the risks were? And so I don't know if they did. And this class action lawsuit probably has them sweating, which is why you're seeing a change of tone from Cameron now publicly doing this. And so they deserve some criticism.
Yeah.
Like, they are not saints here for offering this product, I don't think. 340,000 people, use this. Did they understand the risks? I'm not so sure. And so, they're definitely not saints here either.
Well, everyone wants to deflect blame. It's like that meme with the Spider-Mans all pointing at each other, but they're all to blame. Do you know what I'm talking about? That image?
Yeah, exactly. It's like the Spider-Man meme. And it's like, these things didn't have FDIC insurance. They didn't have any, there's no.
And they are technically regulated in a way, being here and KYC and all of that, but still they have a lot of risk. Okay. Yeah. I know you've got like 4 or 5 more minutes, just macro. Right now we're starting the new year. Is Powell going to be, as aggressive, sustaining high interest rates? How much longer can we go? We saw Japan, kind of do a blink. What's the big picture for you going into January in this year for macro?
Yeah, the big picture for me is, I mean, I think it's very clear from the Federal Reserve that they're going to keep remaining aggressive, and they're probably going to hike a little bit more, and they're going to try to keep it high for longer. That was basically their message. And I don't think they're really happy with the financial conditions. Like, you look at the last quarter, S&P and NASDAQ are kind of like flat, maybe even a little positive. And you're seeing kind of still that buy the dip mentality. So financial conditions maybe aren't as tight as they want. And Powell said that in his presser. He said, I want financial conditions to better reflect the tighter monetary policy that we're like laying out there. So, you're still seeing retail investors kind of YOLOing into the stock market still, into these like cyclical growth stocks right now. That's not the kind of thing you see at the end of a bear market or anything like that. That's the type of thing you see at the end of a bull market. So I still think we're in the early innings here, and you're seeing interest rate sensitive sectors like housing start to really roll over. Like, existing and new home sales are down 30-40% from their all-time highs. And I think you'll start to see that trickle into the CPI prints. There's a big lag between the owner's equivalent rent, which is a component of the CPI, which is the 35% of the CPI, and it's the shelter component. And you're going to start to see these home prices, which have really rolled over the last quarter or so, start to show up in the CPI. So I do think CPI inflation will start to come down. I think we'll see some prints come down. And then I think in that time, we'll also see layoffs start to spread outside the tech sector. We'll start to see unemployment go up. We'll start to see earnings start to get impacted. And so we'll start to see more of a traditional, economic fallout from this tight monetary policy. And risk assets will probably struggle. And so I think 2023, first half of 2023, maybe even later half, it's going to be a little bit rocky. And I don't think Bitcoin will necessarily be like safe from that. But, when I look around at governments around the world, and it just seems like they haven't learned their lesson. They're still spending money like crazy. And if things start to hit the fan again, unemployment rate goes up, I think you'll get a lot of people saying, why can't we have stimulus checks now again? Like, and I don't think these politicians really have connected the dots of how their fiscal policies contributed to the rise in consumer price inflation. And you just look over in Europe. I mean, I just read an article about Spain promising another $10 billion for anti-inflation measures, right? And you see that all across Spain. They're just printing money to fix an inflation problem. And I think you'll see the same thing in the United States. These politicians, once they get pressured from their constituents, once their constituents start struggling a little bit more with, losing jobs and things like that, they're going to be like, why can't we have another handout? And I think they're going to give it. And I don't think they understand the consequences of their actions or their policies. And so I do think there will be a quote unquote pivot of once things start to really hit the fan and people lose their jobs. I think they'll go back to their stimulus checks. I think they'll go back to bailouts and all kinds of things like that. And in that scenario, Bitcoin will do well. Everyone seems to agree now, though. I used to be like, me and Dr. Jeff and others were like, yeah, we think it's going to be kind of rocky into the first half of 2023. Then it might go up from there. But now that seems to become the consensus, which always worries me because it's never right if it's the consensus view. So now I'm thinking it could be earlier or it could be later where things really start to hit the fan. But I'm just kind of changing my view as the data comes in and as things continue to change.
Yeah, no, thank you so much. I mean, it's really interesting to see the spot we're at, and we still keep spending and we still keep printing. They did sort of a chicken pivot to keep the treasury liquid at the end of last year. And meanwhile, the expenses for interest payments are mounting. And I just find it fascinating how much they're giving to the banks. These too big to fail banks. Preston talked about it on his last show, and James Lavish said something that is a good way to end it. Powell's basically going to take it to the brink. He won't wreck things because he can't, but he will take it to the edge of that cliff right before we're going to, and then bam, that's when the pivot will be.
Yeah,
has to, and you'll crush a lot on the way.
These banks have been rolling in profits, by the way. Was that what James was talking about?
300 billion a year, so 50 million a day that is just going to the banks.
Yeah, they with interest rates this high, and they just refuse to raise the average customer's savings account interest. It's still flat at zero, and they're just making money on spread, and nobody's talking about it. I'm like, these commercial banks, man, they're rolling in profits right now. So,
well, we're talking about it. Sam, thanks so much for coming back on. I'd love to have you back on soon again. Thanks for everything you share with us about macro and DCG and Genesis. We'll be following you, and I'll link your Twitter profile in the description. So have a great
yeah, thank you. Sorry, I want to fit one thing in real quick for GBTC.
Oh, I didn't know you had time. Go ahead.
Yeah, well, it's okay. So GBTC shareholders, if you're listening to this, it is important. It's important to have a presence and to organize. Some kind of informal activism from shareholders is powerful. You need to have your voice heard for these things coming down the road, I think. So
David Bailey's doing that.
Yeah, David Bailey. That's what I was going to say. It's redeemgbtc.com, I think is what it's called. And I would go there and just sign up and just, it's helpful to organize as shareholders. David Bailey's done a great job. And so go check out that website, go sign up. And you'll just remain informed about what's going on. And it's a great endeavor. So go check it out.
Great. Thanks for mentioning it. See you later, Sam.
Thanks, Natalie. Have a good one.
Thank you so much for checking out this show. Again, make sure you're subscribed so you don't miss out on any new content. And I love to hear your feedback. Leave a comment or send me an email at natalie@talkingbitcoin.com. Let me know what you think, if you have guest suggestions, and I'll see you next time.